Hello guys, and welcome to Daily Market Movements. Welcome to another episode where today we're going to be analyzing the gold markets. Just before I start today's video, for those who are wanting to join my signal service, please do not hesitate to visit my website, dailymarketmovements.com. I've left the website link in the description of today's video, and I charge a very small fee of $29.99. But let's talk about the gold markets. Gold is hovering around 1935. We've actually seen quite a nice rally today off that 0.61 fib level, which is down at 1920. If you've been watching my videos for the past couple of days, you'll know that we've just kind of been range bound, really hovering around at 1920, maybe having little 5 to 10 point swings throughout the day. But today has been, a rally that you can kind of build confidence upon, because we're still trading up near those swing highs for the trading session. There's still another 2 to 3 hours left of this trading session here on Thursday. But if we can close here, this could potentially trigger a move up towards 1960 in the upcoming days, but potentially going into next week. Now, for those who've also been watching my videos throughout the week, you'll know that I've explained that we're currently trading within this triangle pattern here, which is technically a bullish sign. When this appears on your chart, it is technically bullish, and I think there's a 62% ratio where you do actually break out towards the upside rather than the downside. So this chart pattern does favor a break towards the upside. It doesn't always happen. I'm not saying that it is definitely going to break out towards the upside, but what I am saying is that there's a 62% chance when this pattern forms. And until we do get a breakout, I think that this is where gold is going to be trading between 1960. We could get rejected up at those levels, and we could potentially come all the way back down to around 1930. But ultimately, we will have to break out of this pattern, whether that be to the downside or the upside. Your guess is as good as mine. But when we do get that move, that's what's going to dictate where the gold charts head next. And if it is towards the upside, then I think we go straight to 1990. That would be a given. And if it's to the downside, then we could see a move down towards a 50-day EMA. Whether that holds or not, your guess is as good as mine, but that's all the way down at 1908. So that opens up the door down towards 1900. If this pattern does trade all the way until the very end, and we break up towards the downside, you could potentially see a lovely 50, maybe even 60-point drop there for the gold markets. But if we were to take out that 50-day EMA, then I think that opens up the doors down towards 1880. So what I do like about this gold chart at this moment in time is that the pattern is neat, and there are definitely great money-making opportunities on the horizon here for this precious metal.